Let's talk about the naughty and the nice list, and I'm not talking about your family members or any friends that you're thinking about giving gifts to or not. I'm talking about stocks that are on the naughty list and stocks are on the nice list. And I'm actually not even talking about stocks that are going up versus stocks that are going down. What I'm talking about is as an option trader, okay? What do I consider to be on the naughty list? What do I consider to be on the nice list? Well, let's start with the naughty list first. The naughty list are those options that are just super expensive. And those are the ones that if you're buying call options, if you're bullish and you're wondering why the stock went in the direction that you expected it to go into, and yet the option still lost money, that's because naughty, those options were too expensive. So how do you view an expensive option? This is how I do it right now. I take all of the stocks that are optionable. There's about 4,000 plus that are out there. What I do is I take a day-by-day ranking of their time premium, and we reverse engineer that into implied volatility. We're able to timestamp that and look at it each day. Now, if I have a year's worth of time premium that's been reverse engineered into implied volatility, and I timestamp that every day, I have a low for the year, I have a high for the year, and of course, I can measure that against where we are right now. What I do is I look at those top 10 optionable stocks where they have the most expensive option premium today versus where they are in the entire year. Those are as follows. Oracle is at the top of the list. If you see, the expensive option premium there is 67. The low for the year is a little around 24, and currently it's trading around 64, so it's very close to expensive. Lululemon is on here. Paychex is on here. Ciena, FERG, FDS, AVAV, MTN, CORT, and RYTM round out those expensive options. What I want to do with you is let's just take a quick look at maybe one or two of them at the very top. And so I'm going to pop on over and I'm going to type in ORCL, Oracle. Now, if I'm going to look at Oracle, again, what I want to do is I want to remove most of the stuff here on the screen. So what I'm going to do is I'm going to remove the implied volatility. I'm going to also remove anything else that's on here, maybe the Fibonacci charts as well. And this will give me an idea of what this is going to look like. I can even remove the channels. And then let's go ahead and update this once again. So what I want to look at really is just the stock chart itself. All right. And then I'm going to add in the short-term volatility. And there we go. Now, take a look at this. This is just the IV. All right. When you see this chart, this is just the IV. Now, if I want to look at the chart itself, let's look at the stock chart and let's add the IV on top. That's going to show us two things. It shows me where that stock has been in the last X number of days, right? And then more importantly, where's that implied volatility been for much of the year? As you can see, the implied volatility for Oracle, remember I said it was down here in around 24 and change? Well, that was back in July. It's very, very high right now, but we have earnings coming out in 2 days, so that's why it's high. And now, if you like Oracle as a stock, then buying call options here, not the thing to do. All right. In fact, I'd rather be a seller of time premium with Oracle than a buyer. Okay. Because of why? Because the implied volatility is on the naughty list. It's true for the others we talked about, which was LULU, Paychex, etc. That's the case. Who's on the nice list? Well, the nice list is the cheap options. Those are options that if we look at the implied volatility, same thing. If I do a timestamp of a year's worth of implied volatility on all optional stocks, and then I do a ranking and I say which stocks are the cheapest they've been all year, and if I were to rank them, which stocks come into the top 10 for the nice list? Well, here they are. All right. RBRK is number one. Uber is number two. TEM, ROST stores, CB, VTR, EPD, TRP, SOLV, and NSC round out the top 10. Again, Where do they come up? Why do they come up on this list the way they do? You look at the high implied volatility for the stock for the year. You look at the low implied volatility for stock for the year, and where's it trading at right now? RBRK is at its low implied volatility. So too is Uber. So is TEM. So is ROST stores. If you notice these last two, if they're equal, that means they are trading on their low implied volatility. All of these top 10 are hitting new lows in the last year in options premium. Let's take a look at one of them. I want to look at Uber. All right, so I want to look at Uber. So let's pop on over, and I'm going to change this chart. I'm just going to type in UBER. And what we're going to see is a complete reverse of the red line. Look at Uber. Uber's had lows for this year, trading around 60. The highs we saw were up here near 100. This side is the price, the stock price. This side is the implied volatility. Look at the highs for the IV back in April, trading near an 80. Look at the highs as of right now, trading down here near 30. From 80 to 30 is more than a 50% drop in options premium when you look 30 days, 60 days, etc. going forward. Now, if you think that Uber has caught some bids, is now moving higher and is going to continue to move higher into the end of the year, maybe into January, then option buying makes sense because the options are cheap. Uber doesn't have earnings for the next 58 days. That might be a reason why the 30-day options are cheap. If we looked at the 60-day options, they might be a little bit more expensive because they're including that upcoming earnings report. But when I look back on what's on the nice list, what do they all have in common? They all have cheap options, all right? So, to summarize the naughty and nice list, volatility is used to determine the type of option strategy that we want to use. Again, I like to buy cheap time premium, as is the case with perhaps Uber. I haven't done anything more than just look at the options themselves. I haven't looked at seasonality. I haven't looked at anything contrarian. I haven't looked at anything other than the fact that there are some cheap options out there and there are some expensive options out there. I like to buy cheap. I like to sell expensive. But like I just said, I want to make sure that there's an underlying reason, that there's an underlying pattern before I execute any trade.